Okay. Good morning, everyone. Welcome to this session on Ind AS 33 that deals with earnings per share. Okay, so from your exam perspective, it's quite an important standard. You can expect a question. The good thing about this topic is there are no journal entries. The bad thing about this topic also is that there are no journal entries. Okay. Why good? Because we can cover problems without having to prepare journal entries or pass or balance sheet or, those kind of nitty-gritties. Why bad? Because it's a purely computational and conceptual standard. Okay. So that is the reason journal entries absence is both an advantage and to some extent a minor disadvantage. Okay. But it is a very scoring standard and a very conceptual standard. So I would advise you to have your calculators next to you. And if you are having the habit of writing side by side, then have a notebook also so that we can solve together. Okay. So that is a brief introduction. Now, why this Ind AS 33 was introduced? And before that, did we have a corresponding standard in the AS regime? Yes, in AS regime, there was, I think, AS 20 that dealt with earnings per share. So the concepts which are there in AS 20, you will also find a large number of concepts in Ind AS 33. Okay, basic EPS, diluted EPS, most of it, the calculation is on similar lines like we used to do in AS 20. Okay, so that is the common aspect. So you would have studied AS 20 in your intermediate. So that is the reason you will find this standard a little bit familiar compared to the others. Now, why is EPS so important? The fact that it is important is visible from the profit and loss statement itself. In the statement of profit and loss, you can find earnings per share appearing as a figure that is disclosed right on the face of the P&L. It's not gone and hidden somewhere in your notes. The way P&L is, equally important your figure of earnings per share is. Why do we attribute so much of importance to EPS? Well, EPS acts like a connection. It is a connection between the market price of your share and what results you are declaring. I'm sure you must have heard the ratio PE multiple. Okay, I'm sure you must have heard the ratio PE multiple. What do you mean by PE multiple? Price earnings multiple, or PE ratio, price earnings ratio. So the earnings is taken from in accordance with this standard EPS. When you multiply it with the PE multiple, you can probably estimate what is going to be the future price of a particular share in the market. And that is why this becomes a very, very crucial figure for analysts, investors, stakeholders alike. Okay, so that is the reason we had to have a separate standard on earnings per share. All right. So there are two types of EPSs, as all of us are quite well aware of. One is your basic EPS and the other is your diluted EPS. Do I disclose both of them? Yes, you do disclose both of them. Why do we disclose both of them? Because one of them gives the picture of the earnings as on today, whereas the other factors in the potential dilutions that are expected on account of certain instruments in your capital structure, which are convertible into equity shares in the future. Now, when I talk about EPS, earnings per share, it is from whose perspective? It is from whose perspective? It is from the perspective of the equity shareholder. It is from the perspective of the equity shareholder. And when I talk about equity shareholder, who is my equity shareholder? It is that shareholder who has a residual interest in the assets, in the net assets of the company after everybody else's claims are satisfied. So who is this? He is the residual shareholder having interest in the net assets of the entity after sorry, not residual shareholder, residual, my bad, one second please, residual interest in the net assets of the entity after all other claims are met. After all other claims are met. So your debenture holders are done, your preference shareholders are done. If you have multiple classes of equity shares, then that share who is last in line to receive the interest in the net assets, the EPS is computed from that shareholder's perspective or from that share's perspective. Matlab iske baad there is no other residual interest left. Okay, so we are looking at that person who is last in queue to receive whatever is left in the net assets. So that is the perspective from which we calculate the earnings per share. Now, when I talk about EPS, the name only tells us it is earnings divided by number of shares. It is earnings divided by number of shares. So when I talk about earnings and number of shares, I just now spoke to you, shares is from the perspective of the last person in line to receive the residual interest. So typically it is going to be number of equity shares, Okay, so when I talk about earnings in that case, I have to consider whose earnings? I have to consider the earnings that are attributable to these equity shares. I have to consider the earnings that are attributable to these equity shares. So I will be having net profit attributable to equity shareholders. Net profit attributable to equity shareholders. This is the full form. Net profit attributable to equity shareholders. This is what is your numerator. Okay, it's a simple formula, net profit divided by number of equity shares. But let me move one step further. Let us consider two companies, X Limited and Y Limited. Okay, now the profit figures is 1 lakh for X and 1 lakh for Y. So these are your profit figures. Okay, which profit? It is going to be profit after tax. No other shares in the capital structure. So it is my net profit attributable to equity shareholders. Number of shares. Let us assume that on 1st of January 2000, 1st of April 2021, you had in the capital structure, let us assume 10,000 shares. And here you had 1 lakh shares. On 31st March 2022, X Limited made another fresh issue of 90,000 shares. No fresh issue here. So totally, how many shares am I having? I am having 1 lakh shares here also, and I am having 1 lakh shares here also. So if I apply the above formula, my basic EPS appears to be 1 lakh divided by 1 lakh, 1 lakh divided by 1 lakh. So this is going to be rupee 1. This is going to be rupee 1. And if the reader of financial statements of X Limited and Y Limited looks at the figures and looks at the EPS figures, when he looks at the EPS figures, he will say the company has performed in a similar fashion. But is it really true? Answer is no, it's not. X Limited gave me a profit of 1 lakh when there were 10,000 shares for the entire year. It was on the last day, that is on 31st March, that 90,000 shares were issued. So for the entire year, X Limited's capital base was only 10,000 shares. It is on the last day that 90,000 shares got added to the capital of X Limited. Contrast it with Y Limited, which had 1 lakh shares right from the beginning. So that had a bigger capital base as compared to Y Limited, because 1 lakh shares were invested throughout the period. So therefore, the standard says we cannot stick to just a number of equity shares. We have to stick to something known as weighted average number of equity shares. And what do you mean by weighted average number of equity shares? Weighted average number of equity shares means number of shares, but they are given weights for time. Okay, that is number of equity shares adjusted for time periods. In issue. Most of you know this. It's simple concept. Okay, we'll be doing a lot of problems, don't worry, but I'm just kind of making the laying down the picture in front of you. So when I look at X Limited, it had 10,000 shares for the entire 12 months or 365 days, whereas 90,000 shares were in existence only for 1 day. They were in existence only for 1 day. So when I do this calculation, it comes to 90,000 divided by 365 plus 10,000. So that is 10,247 shares, ignoring the decimals. Here there is no change. So this is 1 lakh shares. So now when I calculate my basic EPS, I will compare the earnings of 1 lakh with these shares. So this comes to 1 lakh divided by 10,247. This comes to about rupees 9.76, and this comes to rupee 1. And now you look which company has performed well. Clearly it is X Limited that has performed well. So when I talk about EPS, there are two components. Okay, I'm still in basic EPS. This is going to be net profit attributable to equity shareholders divided by something known as WANES. That is my weighted average number of equity shares. Okay, so these are the two components that we will be having. So when I talk about net profit attributable to equity shareholders, this will be profit. Now, what is this profit? Is it EBITDA? Is it EBIT? Is it earnings after tax? What is it? Attributable to shareholders. So this is going to be earnings after deducting amortization, depreciation, minus tax. So after the tax effect, minus any appropriations to shareholders other than the equity shareholder. So preference dividend, for example, divided by the number of equity shares weighted for time. Number of equity shares weighted for time. So this is what is my brief understanding or brief explanation regarding the formula. Now the whole chapter is going to be discussing on what is the numerator, what is the denominator, certain special cases like bonus issue, like rights issue, and then we move on to diluted EPS to do the remaining calculations. Okay, so far is it clear? This is something which you have already studied. So is it clear so far? Any difficulties or anything that you are having a problem with? Please let me know. Otherwise, I can proceed further. Good morning, Srinidhi. Yes, Anybody else? Anybody has any doubts? Who all are there watching? Where is my, it's clear. Mahinder is there. Sai Ram is there. Good to see you. Okay. All right. So with that background, I have uploaded 2 files on your Board of Studies portal. The first one is this presentation that is there, which is, a compilation of problems from your study materials, RTPs, all of them put together, along with little bit of theory here and there. Okay. The next one, in your assignment section, I have put in certain extra questions. Now, what do you mean by extra questions? Well, these questions are not there in your study module, but concept is pretty much the same. Okay, so it is for extra practice. These I have picked up from the earlier AS20 questions. Okay, so this is taken from the old syllabus. All these cases you are having. So I would prefer that you have these 2 study materials with you, maybe today, right now, or even end of the day is fine, but ensure that you have these 2 files with you. Okay, it's there on both the sides. So these questions which are in this presentation, these are not there in the existing study module. Okay, which are in a plain paper. These are not in your existing study module. Whereas what is there in this presentation is drawn from your RTP study module, etc. How I will be doing the session is, I will be discussing the theory. Most of the theory is given in your slides. You don't have to worry. Whatever problems are there from the presentation relating to your study material and RTPs, I will be solving with you physically. The questions that are there here in this file, I will be doing a overall broad lookout of this entire sheet. Okay, reason is it is quite simple. It is for extra practice. I would prefer if at your once the sessions are done, you start to solve these questions by yourselves. Okay, you start to solve this by yourselves. Okay, so now I have a question. What is the logic for weighing the number of equity shares based on time? See, ultimately, who is going to be most interested in the earnings per share? The equity shareholder. So the equity shareholder wants to know how much his investment has earned. That means how much each share has earned. Now, when I have to calculate how much each share has earned, I will obviously have to factor how long that equity share was there in the capital structure of the company. You can look in this example. In this case, there were 1 lakh shares throughout the year. Here also there were 1 lakh shares throughout. That means simple logic will immediately bring you to the conclusion, dono ka EPS same hai. But is it really same? No. These 90,000 shareholders, holders holding 90,000 shares, unka capital came on the last day. They've not yet invested for the entire period in the company, and therefore their capital was there only for a period of 1 day, only for a period of 1 day. And that is why we do the weighing based on time. We have to understand how much my investment was there for what period of time in the company, and basis that I will have to do the calculation of basic EPS or diluted EPS. I have to consider how long is the share invested in the company. Otherwise, it gives a very false picture. It is like this 1 and 1. Aapko lagta hai sahi hai, but it's not really giving a true picture. Okay, why? Because 90,000 shares of X Limited came into existence only for 1 day in the entire financial year. Okay, so that is the reason we wait for time. And with that background, let us then proceed to some questions, easy questions. Okay, I'll be moving up and down the presentation so that we cover some important parts first, some simple parts later. Okay, so when I talk about net profit, it is the net profit which is attributable to the equity shareholders. So you can check this small question. It's a simple question. Net profit before tax was 200 lakhs. So that is taken here. The company's income tax rate was 37%. So 200 minus 74, 200 into 37%, that gives you 126. The company's preference share capital has the following classes. The first is 12% non-cumulative preference share capital. The other is 10% cumulative preference share capital. So what do you mean by non-cumulative? What do you mean by cumulative? Well, this is something you already know from your cumulative preference shares. Okay. Cumulative preference shares. That means dividend accrues every year. Dividend accrues every year. That means whether you pay or not, dividend will accrue on that as a liability, and then you will pay it subsequently, probably whenever you have funds or something like that. Okay. So that is the meaning of cumulative. If you have not paid it, you will accrue it and keep it as payable and pay it subsequently. But each year the dividend goes on accruing. When I talk about non-cumulative preference shares, these are the shares whose dividend does not accrue every year. Instead, if I declare it, it's accrued. If I do not declare it, for that year there is no dividend. Okay. So dividend does not accrue every year. Does not accrue every year. It is at the discretion. It is at the discretion. Whenever they declare, that time the dividend will be paid to the preference shareholders. If they do not declare, no dividend will be paid. So what does Ind AS 33 tell us when I have to compute net profit attributable to equity shareholders? It is going to be net profit after tax minus, in the case of cumulative preference shares, what are these type of shares? These shares, dividend accumulates every year, and therefore you will deduct the preference dividend. Whether paid or not. Because every year it's accruing. So therefore you will deduct the preference dividend in case of cumulative preference shares, whether it is paid or not. Okay. And in the case of non-cumulative preference shares, preference dividend will be deducted. Only if paid. Or rather, not if paid, only when paid. It's not accumulating. Which brings me to another conclusion. Preference dividend paid in a particular year, will you deduct? No, because it would have been deducted on accrual basis. So suppose year 1 you did not pay, it accumulated. Year 2 you did not pay, it accumulated. In year 3 you paid the dividends of years 1, 2 and 3 together. So in the third year, when you are computing the net profit for equity shareholders, will you be deducting all the 3 years preference dividend? Answer is no, you will not. You will be deducting only for the third year. Why so? Because years 1 and 2 you have already deducted when you were computing the net profit attributable to equity shareholders. So that is what is the reasoning behind this. Okay, so net profit after tax minus cumulative preference dividend, whether paid or not, अपने को deduct करना है. But non-cumulative preference dividend you will have to deduct only if it is paid. It does not accumulate every year. Okay, so once you get that, this is going to be your net profit attributable to equity shareholders. So with this understanding, we come to this question. 12% non-cumulative preference share capital, 200 lakhs. So this is cumulative. 10%, this is non-cumulative. 10% one is cumulative preference share capital, 300 lakhs. In the accounts, Mitra has provided or paid the following dividends on preference capital. Non-cumulative shares, fully declared for the current year. Fully declared for the current year means already they have declared. That means it is paid. Okay, that means it is going to be paid. That means a liability is recognized. So therefore, I will recognize this. I will recognize this and deduct it. I will recognize and deduct 200 into 12%. On cumulative preference shares, provided fully for the past 3 years. मतलब पहले 3 साल में you had not provided for. Now all the 3 years together you are going to provide. All the 3 years together you are going to provide. Now in that case, will I deduct all the 3 years? No, this is cumulative. Years 1 and 2 would have been deducted in the previous years only. So therefore, here you will be deducting only for 1 year. Only for 1 year. So this is 30. At the same time, the company also provided for dividend distribution tax at 12.75%. So my total dividend is 24 plus 30. So that is 54 into 12.75%. So that comes to 6.885. So after deducting all of this, you are arriving at net profit for the period attributable to equity shareholders. For the period attributable to equity shareholders. Okay, so this is one thing that you had. What about transfer to general reserve? वो तो appropriation है. It is a movement between reserves and therefore you will not consider it. The net profit attributable to equity shareholders belongs to the shareholder. General reserve also belongs to the shareholder. And therefore, we do not consider inter-reserve transfers. Okay. Dividend on cumulative preference shares for prior years. Transfer to general reserve should be ignored under Ind AS 33 in computing net profit attributable to equity shareholders. So fairly simple concept. Yes, nothing very difficult about that. Okay, so we'll do question 2 at a later stage. All right. So we have now completed our discussion on net profit attributable to equity shareholders. Okay. How exactly do we calculate? More questions are there, but abhi ke liye it's kind of, discussed. All right. Now we move on to weighted average number of equity shares. These are number of shares in issue, weighted for time. अभी तक हम बेसिक में ही है. We have not yet moved on to diluted. Okay, so don't worry. Simple calculations. We pick up another couple of questions for us to understand what it is. Okay, how do we calculate weighted average number? Okay, and at the same time, just a second. 1 minute. Yeah. So I'll be doing the other questions a little later, which I am right now not looking at. Okay, so we'll be doing that. Don't worry. Okay, so let us do some simple questions on veins before we come to your study material. In a financial year, Ravi Limited issues rupees 80 lakhs worth equity shares at par on 15th December. It had also bought back 20 lakhs equity capital at par on 1st March. So there was a fresh issue. There was also a buyback. The equity capital was 150 lakhs at the end of the year 31st March. Calculate the veins if the face value of each share is rupees 100 and compute the basic EPS if the net profit attributable to equity shareholders is rupees 10 lakhs. Okay. So apne ko kya hai? We are having closing capital. We are having fresh issue details, and we are having buyback details. So therefore, how am I going to do the recording? How am I going to do the calculation of veins? So first I need the opening capital. So closing is nothing but opening plus fresh issue minus buyback. So when you do that calculation, do the substitution, you get your opening capital as 90 lakhs. Each share is worth rupees 100. It's given to you. And therefore, number of equity shares is 90,000 at the beginning. So In a financial year, that is on 1st April, you had 90,000 shares in issue. Now, it issues 80 lakh shares at par on 15th December. So 15th December issue 80 lakh rupees worth of shares. So that is 80,000. And on 1st of March, you are issuing shares worth, you are buying back shares worth 20 lakhs. So that is a reduction minus 20,000. That is a reduction of minus 20,000. So this 90,000 was there for the entire 12 months. So time period is 12 upon 12. This is the weight. This 80,000 came into existence on 15th December. So 80,000 into 3.5 by 12 will be the weight. It was in existence for 3.5 months. That is half of December, entire months of Jan, Feb and March. So 3.5 by 12. And this 20,000 was bought back on 1st of March. That means it was not there for 1 year. So 20,000 into 1 by 12. But important part is this is a negative figure. This is a negative figure. So now when you proceed to do the calculation, you multiply number of equity shares, with time factor, So 90,000 into 12 by 12, 80,000 into 3.5 by 12 and 20,000 into 1 by 12. So that is what is going to be your calculation. So 90 plus this minus this gives you 1,11,666.67. Is it clear so far? I have a query from Sheena Jain. But sir, the face value in each case can be different. Yes, definitely. For company A, it could be rupees 10. For company B, it could be rupee 1. So then it will reflect the same total share capital and company working in similar way. Well, in that case, the shareholder will know what is the worth of his investment, right? So though you just apparently say that number of shares could be similar, it all boils down to how much capital have you invested in the company also. Okay, so for example, 1 rupee face value would have to have 10 shares to be equivalent to a 10 rupee face value. Okay, forgetting fair value concepts for the time being. So it all depends, but ultimately the investor will know how much he has invested. Okay, question is not clear. Why is it not clear? Yaar, ye to simple sa tha. Question is not clear, it seems. What is not clear, Jay? See, okay, I have an alternative solution for you. With that, maybe you can understand. See, what do you have to do? First thing, calculate weighted average number of equity shares. Okay. So what are you given? In a financial year, there is a fresh issue of 80 lakhs. Okay. At par on 15th December. Okay. It also bought back 20 lakh equity share capital at par on 1st of March. Equity capital was 150 lakhs at the end of the year, 31st March. These are all rupees. These are all rupee values. Okay. Calculate the wains outstanding during the period if the face value of each share is rupees 100. Okay. So now I have to know in the beginning how many shares were there, right? So what is your normal closing capital structure? Opening capital, whatever it was. To that you will add the fresh issue. What is buying back means? Buying back means you are going to buy back your own equity shares. Okay, so now recently there was a TCS buyback that happened. There was an Infosys buyback that happened. What do you mean by buyback? Shareholders will give their shares back to the company itself. for extinguishment probably, but they will give it back to the company. Company will buy back and cancel those shares. Okay, so why do these companies do this buyback? Well, one thing, it is a manner of distributing profits, because instead of dividends, you are ultimately making your share more valuable. So that is one way of distributing your profits back among the shareholders. Only thing is, you are getting back the shares to yourself. Okay, so opening capital plus fresh issue. When a company buys back, its share capital goes down, and that is why you will have to deduct it. That is why you will have to deduct it. So this gives you your closing capital. This gives you your closing capital. So in this example, opening is X, fresh issue is rupees 150 lakhs, buyback is rupees 20 lakhs, and closing capital, sorry, not 150. Fresh issue kitna tha? The fresh issue was rupees 80 lakhs. Buyback was 20. Closing capital is rupees 150 lakhs. So now when you solve for X, it is 150 plus 20 minus 80. So this is rupees 90 lakhs. This is my opening capital. It was there right at the beginning of the year. Then 90 to 90, you added a fresh issue of rupees 80 lakhs, and you have bought back 20 lakhs on 1st of March. Okay, so this is what is the transaction. So when I talk about veins, I will look at each bucket. I will look at each bucket for how long those shares were there in the capital structure of the company. 90,000 was there for entire 12 months. 80,000 came on 15th December. So this was there for 3.5 months. 20,000 shares left the capital structure on 1st of March. Now, that means these shares were not there for a period of 1 month. So that comes to 1 by 12. So when you do this addition and subtraction, you should get your answer. If we are not convinced by this method, there is another alternative method also. The year began on 1st of April with 90,000 shares. On 15th December, you added another 80,000 shares. So plus 80,000 shares. Okay, not on this date. It has happened on this date. Plus 80,000 shares. That means 90,000 plus 80 became 1,70,000 on 15th December. Became 1,70,000 on 15th December. And then 2.5 months continued. On 1st of March, there is a buyback. So minus 20,000 shares. Minus 20,000 shares. That means 1,70,000 minus 20 becomes 1,50,000. And these 1,50,000 shares were there for a period of 1 month. That is till the end of the financial year. Okay, so now when I have to do the weighted average, it is going to be 90,000 into 8.5 by 12. Ye raha. 90,000 into 8.5 by 12 plus 1,70,000 into 2.5. So 1,70,000 into 2.5 months divided by 12. And finally, 1,50,000 for 1 month. So plus 1,50,000 into 1 by 12. So that also gives you the same answer of 1,11,666.67. Okay. So is it understood? Jay Srivastav, did you understand the question now? Mahinder, did you understand why we deducted shares in the case of a buyback? Yes or no? Sheena has understood. Sheena, your query you understood, Baba? Let me know. Others, are you there with me? Please मेरे को busy रखो अपने आंसर से. Okay? Did I lose connection? Just a second. I have lost your queries. 1 minute, please. Just a minute, please. क्वेरीज किधर गए? निसर क्वेरी लिस्ट का साइट नहीं चल रहा शायद. Okay, I got it now. There is some issue with the query site. Not able to see. मेरा क्वेरी का साइट नहीं चल रहा है निसर्ग. चल रहा है क्या? पता नहीं. ओके. अच्छा, क्या करके आया है? सबने क्लियर करके लिखा है? अच्छा, अभी आ गया. ओके, ऑल राइट, फाइन. जय को समझ में आ गया. जय अंडरस्टूड, महेंद्र अंडरस्टूड, श्रीनिधि अंडरस्टूड, Sheena has also confirmed. Okay. Whether in first alternative 20,000 shares for 11 months were with the company, has it been considered? Obviously, no. Jay, this 20,000 कहाँ पे था? It was forming a part of 90,000 shares. है कि नहीं? All right. We do not really know whether it is which shares are bought back. Did I buy back the opening capital? Did I buy back from the fresh issue? I do not really know. And that is irrelevant. Okay. It is forming a part of this 90 and whatever that 1 lakh, that 80,000 that you bought back, that you freshly issued. It is forming a part of one of those. It's already considered when we calculate the opening capital. The buyback effect is already considered. Okay, see, when I calculate this 90, 20 is already considered in that. Okay, so that is, you don't have to worry about it. Okay, so fairly simple question on weighted average. No problems. So let us move on to the next one from your institute's material. Okay. Following is the data for company X in respect of number of equity shares during the financial year X1, X2. Find out the number of shares for the purpose of calculation of basic EPS as per Ind AS 33. So Waynes we have to find out. So 1st April, the opening balance is 1 lakh shares. 15th June, there has been a fresh issue of equity shares. 8th November, there has been a conversion of preference shares to equity. There is a buyback that has happened on 22nd Feb and closing balance is 2,05,000. So you can check first sanity check. 1 lakh plus 75, 1,75,000 plus 50, 2,25,000 minus 20, that gives you 2,05,000. So no other event is missing. It's straight away 2,05,000. Okay, so now if I have to solve this, 1 second. All right. I can do it by 2 methods. I will be doing this timeline method because that is the safest way of ensuring I don't make any mistake. Okay. All right. So the year starts on 1st April 20X1. On this date, you had 1 lakh shares. Okay. And then on 15th June, there is a fresh issue of equity shares. Okay. So 15th June 20x1, you have a fresh issue. That means on 15th June onwards, you are having 1,75,000 shares. You are having 1,75,000 shares. Okay. And then conversion of convertible shares to equity, 8th of November. Okay, so 8th November 20x1. How much is converted? 50,000. So 1,75,000 plus 50, 2,25,000 shares. And finally, on 22nd February 20x2, I bought back. So I am having 2,05,000 shares in the capital structure. So now, what is the number of, abhi I cannot do half a month वगैरह because अजीब figures है. Okay, 8th November, 22nd February. So therefore I will do it on the basis of number of days. Okay, I will do it based on number of days. So for this period, what is the number of days I am having? April entire 30 days. For the month of May, 31 days. And for the month of June, it is going to be how many days? 14 days. Sir, why 14 days? Why not 15? Because on the 15th day, fresh issue is happening. So therefore, your capital structure is changing on the 15th day. So 30 plus 31 plus 14, this is going to give you how much? This is going to give you 75 days. This is going to give you 75 days. Okay. So 1 lakh shares opening balance were there for the first 75 days. After that, 75,000 shares got added to that. So 1 lakh plus 75,000. So from 15th June onwards, you are having how many days? You are having how many shares? You are having 1,75,000 shares. So for this period, what is the number of days that you will have to consider? Well, from 15th June till 30th of June. So that is going to be 16 days of June, July 31, August 31, September 31, October 31, and November 7 days. November 7 days. Okay. So 16 plus 31 plus 31 plus 30 plus 31 plus 7. So that gives you how much? Well, that is going to give you 146 days. So these 1,75,000 shares uninterrupted for 146 days, they were there. After that, there is a further change in the capital structure. So for this period of 146 days, you had 1,75,000. Then there was a conversion. Then there was a conversion of preference shares to equity shares. So therefore, for this period, after the conversion to this 1,75,000, another 50,000 shares got added. So you had 2,25,000 shares. And now, if I have to calculate the number of days, for the month of November, it is 30 days of November minus 7. So that is going to be 23 days of November, 31 days of December, 31 days of January, 21 days of February. Okay. So 23 plus 31 plus 31 plus 21. So that gives you in all 106 days. That gives you in all 106 days. And finally, when there is a buyback, 2,25,000 again gets impacted because of the buyback, falls down to 2,05,000 shares. So this is going to be, for February, we have 28 days. So 28 minus 21. So that is 7 days of February and 31 days of March. So that gives you 38 days. Okay. That gives you 38 days. So when I have to calculate my veins, I have already weighted it for time. You can cross check this. 75 plus 146 plus 106 plus 38. total should come to 365 because पूरे साल का देख रहे हैं हम लोग, we are checking for the entire year. So 75 plus 146 plus 106 plus 38 gives you the total of 365 days. So entire year is considered. And now when I have to calculate your veins, it is going to be 1 lakh shares in issue for 75 divided by 365 plus. Then there was a fresh issue. So 1 lakh became 1,75,000, which were therefore 146 out of 365. Then you have a conversion. So 1,75,000 becomes 2,25,000 for a period of 106 days. And finally, there is a buyback. So 2,25,000 becomes 2,05,000 into 38 by 365. Okay. So when you do this calculation, please do this calculation and tell me what is your answer. Okay. Tell me what is your answer. Quick. Acha, sir, taking number of shares is a better reflection of the company's earning capacity. Obviously, no, I'm looking at earnings per share. तो मेरे को number of shares ही लेना पड़ेगा, right? But I am not taking plain number. I am taking weighted average number of shares. Why weighted average? Because I have to factor in for how many days those shares were present in the capital structure. I have to factor that. Okay. So just do this working and you should be able to get the answer correctly. Calculate this someone for me. Sheena has calculated. Any other answers? More answers, guys. Sheena, check your answer, Baba. Check your answer. One lakh 77, 232. I am getting 1,77,597 shares. Okay, you may have rounded off the decimals or done something like that. Okay, Sheena, just check your totals. Okay, so 1,77,000. Did I do correctly? अभी कभी ना बोलने के टाइम पे we also end up making a mistake. 20,000. 548 plus 70,000 plus 2,25,000 106 by 365 65 342 plus 238 by 365 21,342. 8 to 10 to 12. Yes, 20,548, 70,000, 1,77,232, 233. जो भी है, okay, shares. I also had a calculation mistake. Okay, fine. So this is the way you can present. Alternatively, if you see how your institute has presented, your institute has done it in a slightly different manner. Okay, oh dear, I did not download this. 1 second, please. Have it right here. Yes. So this is 43. This is how your institute has presented the answer. Okay. Nothing wrong in this. Nothing wrong in this. Okay. The only problem is I tend to get a little confused with this kind of presentation because there are chances of me missing out any buyback or any addition or any conversion. Okay. If you look at this timeline that we have considered, all the events are captured. All the events are captured. Whereas if I look at this table, I will have to revisit the question every time to look at what is the event that is happening. So only for this reason, I would prefer doing this. But nothing is wrong in this solution also. What they have done, 1st April, opening balance was there for the entire 365 days. The fresh issue came into existence on 15th June. So therefore 75,000 shares were there only for 290 days. Okay. First 75 days they were not there. That means they were there for 290 days. 8th November conversion happened of 50,000 shares. So they were not there for 75 plus 146. They were there for 144 days. And buyback of shares, they were not there for a period of 38 days. Okay. So 20,000 into 38, you will subtract that. And that gives you your closing balance of equity shares as well as the weighted average number. Okay. So this is also how you can do it. But I would still, my suggestion is I would prefer going by this method. Okay. So that takes care of that question. Yes. This question I have done for you. Let us then proceed to the assignment. Okay. I will be leaving this question for homework. It is very simple. Okay. Compute Vains in the following case. Opening balance 5 lakhs. Equity shares issued for cash 1 lakh. Equity shares bought back is 50,000. Balance of equity shares. Abhi you have done a fairly complex thing जिसमें days ways के questions थे. Days and all were there. So I think this you should be able to do it. I will not be doing this for you. Okay, वो homework में देख लेना. I have given both the ways, the table also, the chart also, so that you come to know that answer दोनों में same आता है. Answer is the same in both of them. So it should not create a problem for you. Okay. Now we move on to, sir, what happens if I am having partly paid up shares? Partly paid up shares in the capital structure. ये तो सर whatever questions we have seen so far, they were fully paid up shares. तो कोई बात नहीं. But what about partly paid up shares? What do I do? How do I calculate weighted average number in the case of partly paid up shares? Sir, partly paid up shares छोड़ दो. Forget partly paid up shares. अरे why? Are they not people who have invested in the company? Yes, sir, they have. So would they not be interested in what is the EPS? Yes. But sir, they have not paid fully. हाँ, तो क्या हो गया? So what has happened? Consider them on a proportionate basis. Consider them on a proportionate basis. So for example, you have 1 lakh shares of rupees 10 each. Of rupees 10 each. Rupees 3 paid up. Rupees 3 paid up. So make it equivalent fully paid shares. So that is nothing but, see, you have 1 lakh shares, correct? On each share, you have received rupees 3. So that means you have received 3 lakhs. So in terms of fully paid shares, it is nothing but 30,000 shares. So when I have to do the calculation for weighted average, 1 lakh shares of rupees 10 each, 3 paid up, is nothing but 30,000 shares of rupees 10 each fully paid. Once you do the conversion, then when you proceed to calculate weighted average number, etc., you will be taking this number in your calculation. You will be taking this number in your calculation. So you factor out, okay, or I can also get this 30,000 as 1 lakh into 3 by 10. Out of 10, 3 is paid. So that is 30,000 fully paid shares equivalent. It's not that I have issued 30,000 shares, but jitna paisa aaya hai, uska proportionate comes to 30,000 fully paid shares. Okay, so with that background, let us look at these questions. Okay, with that background, let us come to this question. Okay, during the year ended 31st March, Giant Limited makes a public issue of 1 lakh equity shares of rupees 10 each, which was fully subscribed. The calls were made as 5 rupees on application and allotment made on 1st July, 2 rupees on first call made on 30th September, 3 rupees on second and final call made on 1st January. Partly paid shares are entitled to participate in the dividend to the extent of amount paid. The company had 5 lakh shares outstanding at the beginning of the year, and apart from the public issue, there were no other changes in the capital. Compute the weighted average number of equity shares. So simple hai. On 1st April, I had 5 lakh shares. Yes. These are fully paid shares. So 10 divided by 10, 100% paid up. These were there for the entire 12-month period. So into 12 by 12. So that is 5 lakh rupees there for the entire year. On 1st July, you have made an issue of 1 lakh shares, but they were only 5 rupees paid out of total face value of 10. That means only 50% is paid. 1st July means July till March. So that is a 9-month period. So your weight is going to be 9 by 12. So what is going to be your, what you can say, weighted average number? That is going to be 1 lakh into 50%, that is 50,000 into 9 by 12. So that gives you 37,500. 1 lakh into 50% into 9 by 12. Okay. When I talk about this 30th September, there is another call that is made on the same 1 lakh shares. So 1 lakh 2 divided by 10. That means out of 10 rupees face value, 2 rupees they are paying. So 20% for a period of 6 months. 30th September to 31st March is 6 months. So 6 by 12 is going to be your time factor. It's going to be your time factor. So weighted average number of shares comes to 1 lakh into 20%. So that is 20,000 into 6 by 12. So that comes to 10,000. And finally, on 1st of January, the final call was made. So 1 lakh into 3 divided by 10. So that gives you 30%. Period outstanding for 3 months, Jan, Feb, March. So that comes to 30,000 into 3 by 12. That comes to 30,000 into 3 by 12, 7,500. Okay. So the total comes to how much? Wayne's 5 lakh 55,000. 5 lakhs 55,000. Any doubt so far? किसी को कोई डाउट है इसमें? Weighted average in the case of partly paid shares. Any doubts? Srinidhi, Sheena, Jay, Sairam, Mahinder. It is clear. Okay, fine. All right. I suppose there is one question on partly paid shares in your, what you say? This is done. This is done. 1 second, please. Let me just search it. Yes. Illustration 17. 2 लाइन का क्वेश्चन है, 1 लाइन का आंसर है. Okay, it's fairly simple. An entity issues 1 lakh ordinary shares of ₹1 each for a consideration of ₹2.5 per share. So you are issuing it at a premium, so 2.5. But the cash of only 1.75 per share was received. The partly paid shares are entitled to participate in the dividends for the period in proportion to the amount paid. Okay, so 1 lakh fully paid hota, that means you should have received 2.5, but you have received only 1.75. So when you do this, the number of shares to be included is 70,000. Okay, so that was that small question that was there in your study material. Okay, 11.75. Yes, any doubts? Anyone? Partly paid shares clear ho gaya? Yes. Any doubt so far? Anyone? No doubt. Srinidhi has confirmed. Sheena, Jay, Sairam. Good to go. All clear. Okay, fine. Achha. Next, I will be discussing this question with you. These are all now going to combine fresh issue, partly paid, buyback, these concepts put together, molded in one question. You should be able to do it without much of a difficulty. Okay, so compute the basic EPS for the financial year ending 31st March from the following data. 1st April, fully paid shares 10,000. 1st of June, issue of shares, face value 100, paid up is 70, that comes to 10,000. Buyback of shares fully paid on 1st July, 4,000. Issue of shares, face value 100, fully paid 6,000. Net profit before tax is 12 lakhs. Tax rate is 35%. Preference dividend is 5.85 lakhs. Okay. Table is given. I will help you out with the timeline method of calculating weighted average so that you are convinced that the answers come out to be the same. Okay. All right. Now, 1st April, 1420x1, 10,000 shares. Okay. Next, 1st of June, there is issue of shares, face value rupees 100, paid up amount 70 by 100, 70. So that is on 1st of June. 1st June 20x1. You have your existing 10,000 shares plus there is another fresh issue of 10,000 but 70 paid up. So plus 10,000 into 70 by 100. So that comes to 10,000 into 70%. So this is 17,000 shares equivalent. Okay. Next, buyback 4,000 shares. 1st of July. 1st July 20x1. Buyback of how many shares? Buyback of 4,000 shares. So 17 minus 4. From this date, it becomes 13,000 shares. Okay. And then there is a fresh issue on 1st of November of 6,000. 1st November 20x1, fresh issue 6,000. So 13 plus 6, 19,000 shares. And uske baad kya hai? That's about it. Okay. So if I look at the time period, April, May, so this is 2 months. June, so this is 1 month. July, August, September, October, so this is 4 months. November, December, Jan, Feb, March, so this is a period of 5 months. 5, 4, 9, 1, 10 to 12. So now weighted average number of equity shares is 10,000 into 2 by 12 plus 17,000 into 1 by 12 plus 13,000 into 4 by 12 plus 19,000 into 5 by 12. That one share is on account of rounding off. Okay. They, as per the table, they got 15,333. We got 15,334. It is because of rounding off. We have taken this as 1667, 1417, 7917. So that is the reason you are having this deviation. Acha, we have to calculate basic EPS. So net profit is given to you to be 12 lakhs. So 12 lakhs minus the tax. So that gives you 7,80,000 minus preference dividend 5,85,000. So that gives you 1,95,000. So basic EPS is 1,95,000 by 15,333.33. So that comes to 12.72 per share. Okay. So that is the basic EPS. Any doubts up till now? Calculation of veins. Any doubts till now? Sir, may I explain illustration 17 again? Acha. Simple to hai illustration 17. See, 1 lakh shares of ₹1 each. ₹1 is the face value, but these shares are issued at 2.5 per share. Matlab it is issued at a premium. Out of 2.5, only 1.75 is received. So therefore, 1 lakh into 1.75. How much have you received? You have received 1 lakh into 1.75. You have received 1,75,000. But these are partly paid shares. So if you convert it into fully paid shares, I will have to divide it by the full value of consideration. So divided by 2.5. So 1 lakh shares issued at 2.5 paid up 1.75 is equal to 70,000 shares of rupees 2.5 each, fully paid. Sir, premium वगैरह doesn't matter na. Premium is already affected in this. 2.5 includes the premium. Okay. 2.5 is the issue price. Rupee 1 is face value. Rupees 2.5 is issue price. So rupees 1.5 is what you call your securities premium, है ना? It's just a normal fresh issue. कुछ नया नहीं है उसमें. Okay, all right. Did you follow, Sheena? So therefore, यहाँ in the questions that we have done so far, there was no share premium. Everything is happening at par. Here it is happening at a premium. But that's it. Nothing else. Got it? Yes. Mahinder has confirmed. Srinidhi, all clear. Sairam. Okay, so this one we did. All right. Sheena, is it clear? Okay, all right. Now we move on to question 6. Simple again, but you know, they are adding some small twisting adjustments here and there. At the beginning of the financial year, a company issued 1,20,000 shares of rupees 100 each. 50 per share was paid up on that date, which was paid by all the shareholders. So 1,20,000, 100 each, 50 paid up. The remaining 50 was called up on 1st September. Okay. All the shareholders paid the sum except one shareholder holding 24,000 shares. Net profit for the relevant financial year is 2,64,000 after dividend on preference shares of 64,000. Compute the basic EPS for the year as per Ind AS 33. Okay. So 1st April ko you had issued 1,20,000, but they were partly paid. So only 50% is paid. Okay. Till 31st August. 1st September, you made a fresh call again for the remaining 50. Okay. So 5 months they were there in presence. So 1,20,000 into 50% into 5 by 12. That gives you 25,000. 1st September, you made a call कि भाई बाकी के पैसे दे दो. Give the balance amount. Out of that 1,20,000, 96,000 came forward and paid the amount. 24,000 did not pay that amount. So 96,000 became 100% for a period of 7 months, 1st September till 31st March. So this is 96,000 into 7 by 12. So that comes to 56,000. And next one is 24,000 he did not pay. Matlab as on 31st March, he is still a partly paid shareholder. Okay. For a period of 7 months. So this is going to be 24,000 into 50%. So that is 12,000 into 7 by 12. That comes to 7,000. So 25 plus 56 plus 7, 88,000 is going to be your wins. Alternatively, you can do it by the timeline method. Please try out the timeline method by yourselves for this question, and you should get the same answer as 88,000. Okay. So basic EPS is going to be net profit or loss attributable to equity shareholders divided by weighted average number of equity. So 2,64,000 is given to you. It is after deducting preference dividend. Okay, after deducting preference dividend. Okay, and the number of shares is 88,000. So that comes to 3 rupees per share. Okay, so this part is anyways very simple. All clear so far? Okay. Fine. So Sheena, did you understand, Baba, that 1 rupee 2.5 आपको समझ में आ गया? This is done. This is done. Yes. Guys, give a thumbs up. Clear. Mahinder has confirmed. Sairam, Srinidhi has confirmed. Sheena, आपके confirmation का इंतजार है. Yes. But some students are there or not there. I'm not sure. Vidula used to be there. Not sure whether she is there or not. Okay, so now let us continue with the standard. So we have done quite some practical problems on weighted average as well as number of equity shares. Okay. 24,000 also considered in the table. Why? Hey Nayar, see, look at this, Jay. Out of 1,20,000, 96,000 paid the entire amount. That means 24,000 did not pay 50%. So they are still partly paid. So this 1,20,000's breakup is 96 plus 24, right? So 96,000 paid. They became fully paid up for 7 months. But this 24,000 shares, they are still partly paid up. They were considered only for 5 months. So now you still have to consider another 7 months as partly paid. Okay. So Jay, I hope you understood that part. Okay. Yes. All right. So now coming back to our theory. So we have so far discussed what is the numerator part, net profit attributable to equity shareholders. We have discussed denominator part, that is weighted average number of equity shares. So now the question arises, ठीक है, ये तो हो गया, but when is the date for, see, weighted average number के लिए you need the date when the capital structure has changed. The date of fresh issue, when is the date for what you can say buyback going to be considered. All these things you will have to now decide, and the standard gives certain guidance for that. Yeah, this is just for your knowledge. Okay. When shares are issued in exchange for cash, matlab fresh issue shares, further issue shares, what is going to be your weighted average number के लिए, from which day will you consider? You will consider the timing as effective from the date when cash is receivable. It's not saying from the date when cash is received. Received के बारे में बात नहीं कर रहा. It's talking that from the date the cash is receivable, you will recognize ordinary shares issued as being a part of the capital structure from that date. From that date. Okay. Voluntary reinvestment of dividends from the date of reinvestment of dividends. Conversion of debt instrument to ordinary shares, the date when the interest ceases to accrue. In lieu of interest or principal on other financial instruments, the date when interest ceases to accrue. So this is just going to be a small theory for you. You can go through this part as homework. Okay. It's plain theory. And okay. So that is your simple theory questions. Okay. Kuch khas hai nahi. All right. So this is question number 7. Based on that, yeah, this part is the question that we are having. Okay. So in the case of business combination, that means, you know, amalgamation, mergers, or basically amalgamation mergers, you issue ordinary shares as a purchase consideration. So when you issue the ordinary shares, it is increasing the capital structure of the issuer. So it will form a part of the EPS calculation. So from which date will it go in weighted average? From the date of acquisition. That is, from the date the acquirer incorporates the target's profit and loss into its own profit and loss. That will be the date when the earnings are actually flowing in even from the target company to the acquirer. And therefore, from that date, you will include the shares that you have issued as a purchase consideration in your weighted average calculation. Okay. So let us look at this with the help of an example. On 30th June, Bharat Limited merged into Anand Limited. So Anand Limited is acquiring Bharat. From the following relevant information for the year ended 31st March, compute the earnings per share of Anand Limited at the year ending, that is 31st March. Okay. So the merger happened on 30th of June. Okay. Net profit from the date of merger till the end of the year, 5 lakhs. Net profit from the date of merger till the year end is rupees 5 lakhs. And Bharat Limited's is rupees 2 lakhs. It is rupees 2 lakhs. Net profit earned until merger is rupees 8 lakhs. Number of shares at the beginning is given 6,000, 4,000. On the date of merger, 6 and 4. At the end of the year, it is rupees 10,000. So what do I have to calculate? Calculate the EPS. Calculate the EPS. Okay. All right. Go through this question, please, and tell me how are you going to calculate the EPS, or calculate the EPS and tell me. Don't look at the answer. How can I download your notes on business combination referred to in batch 3? Just drop in a mail to the board of studies. I think they should help you out. Okay. Varun Das. Calculate the basic EPS. What is going to be of use to you is this particular concept. Okay. This should guide you to solve this question. Okay. Chalo. Work it out fast, fast. I'm waiting for answers. Yes. Wayne's is 8,000. Sairam is saying weighted average number of equity shares is 8,000. Okay, I'm not saying right or wrong. Okay, I'm waiting for more answers. Will both the profits be merged? Obviously, no. It's a merger that is happening. Okay, so both the profits will be merged. Yes, I need answers. करो श्रीनिधि, प्रिया गर्ग, तनुश्री. Solve. Try to solve it. $15 lakhs divided by 9,000, 166.67 EPS. This is Priya Garg's answer. Let us try to calculate. First is weighted average number of shares. Now, which company is merging? Anand is taking Bharat Limited with itself. Okay. So 6,000 shares were in existence at the start of the year. 30th June the merger happened. So April, May, June. So 6,000 into 3 by 12. Plus you issued another 4,000. Aapko kaise malum? At year end it is 10,000 and merger happened on 30th of June. So another 4,000 were issued. So therefore in my capital structure I am having 10,000 into 9 by 12. 10,000 into 9 by 12. So that comes to how much? 10,000 into 9 by 12, I think it is 7,500. 6,000 into 3 by 12 is 1.5. So that comes to 9,000 shares, weighted average. Okay. And then your net profit attributable to equity shareholders is 5 lakhs plus 2 lakhs plus 8 lakhs. So that comes to 8 to 10, 5, 15. So therefore your EPS is going to be 15 lakhs divided by 9,000 shares. So that comes to 166.67. Tanushri, it should be 166.66. Huh? Just check your figures. Everybody understood? Sairam, your Wayne's calculation is not 8,000, it is 9,000. I hope you understood where was your calculation error. Okay. Yes, that's right. Anybody else? Sheena, are you okay? आपके आंसर्स नहीं आ रहे हैं. Okay, so this question is done for you. Obviously, na, see, when you are merging, whatever Bharat Limited earns subsequently after the merger, that also should be added to Anand Limited because that is what is a merger, right? So, uska profit bhi aayega. Yes, chalo, अच्छा है. Thank you, Sheena. Yes, chalo, sahi hai. Okay, next one. These are all you can just go through. Okay, this is just for you to read. That we will revisit this when we come later. Okay, we will revisit this when we come later for contingently issuable shares. Partly paid shares we have already done. To the extent they are entitled to participate in dividends, they are treated as a fraction of an ordinary share. So we have done this. Vested options and all will come towards the later part of this standard. Okay. So I think that is done. We have also done this question. Yes, I think Giant Limited ka question ho gaya nahi? Yes. Question 5, 6, 7, 9. 8 is done. Yes. So this question is done for you. Okay. All right. Fine. So Bhaskar, question 9. Now here you are acquiring an asset, and for acquiring that asset you are making the payment in shares. So from which date will you recognize the shares in your weighted average calculation? Okay, so that is what we are going to discuss now. As per Ind AS 33, it is this case. Okay. When you are issuing ordinary shares for acquisition of an asset other than cash, the timing will be effective from the date the acquisition is recognized. That means you guys have studied Ind AS 16. So based on Ind AS 16 principles, when should you recognize the asset? That date will be the date from when your equity shares would be recognized in your capital structure. Okay, so with that background, let us proceed to do this. Bhaskar Limited issued 8 lakh equity shares of rupees 100 each on 15th October. Okay. During the year ending 31st March, the company acquired an asset on 1st December for 25 lakhs and issued 1 lakh equity shares treated as 25 paid up. At the beginning of the financial year, Bhaskar's equity capital was 5 lakh shares of rupees 100 each. Compute the basic EPS if the net profit is rupees 37.5 lakhs. Okay. So I think you should be able to do that. Yes. Timeline बनाएंगे फिर से. In the beginning, 1st April, you had 5 lakh shares. ₹5 lakh shares of rupees 100 each. Okay. Next one is it issued 8 lakh equity shares of 100 each on 15th October. 15th October, 8 lakhs. So 5 lakhs becomes 13 lakhs. 5 plus 8, 13 lakhs. And then you have acquired an asset on 1st December. 1st December. So this is 13 lakh shares जो already है आपके पास, plus there is acquired an asset for 25 lakhs and issued 1 lakh equity shares, okay, of 25 each, treated as 25 paid up, okay, plus 1 lakh shares into 25 by 100. You are converting partly paid shares into fully paid equivalent. Okay, so that takes care of your weighted average calculations. So this is 5 lakhs into 6.5 by 12. ये पूरा, this is 6.5 months. This is 1.5 month. This is 4 months. Okay. Plus 13 lakhs into 1.5 by 12 plus 13 lakh 25,000 into 4 by 12. So now when you solve this, eight lakh 75,000 shares. This is your weighted average number. Okay. Profit is 37.5 lakhs. Profit is 37.5 lakhs. Rupees 37,50,000 divided by 4.29 per share. Did you guys understand this part? Yes. Question 9. Everybody understood? Yes or no? Have you followed? I know it's getting a little bit monotonous, but we are on the verge of completing the first part. We are almost on the verge of completing the first part. Agya. Mahinder has got the answer. Tanushri, Jay Srivastav, Priya Garg, Sheena Jain. और कौन है? Vidula is not watching nowadays. Sairam, all clear. Srinidhi, all clear. Question number 9 is clear. Okay. All right. So I think I have done quite a number of questions to train you in weighted average number of equity shares. Okay. All right. So what we shall do now, we shall take a 10-minute break. Yes, it's 8:45. We shall take a 10-minute break and After the break, we will start with bonus and rights issue. We will start with bonus and rights issue. Okay. वो थोड़ा important है. So we take a break for that. Okay. All right. Nisarg, Okay. Okay, guys. So welcome back. So till now, whatever we have done has been more of making you familiar with weighted average number and making you familiar with net profit attributable to equity shares. And there were some simple questions that we have done. So far, whatever we have done, likelihood of that coming in the examination is very remote. Why? Because they are too basic for CA final and they do not cover as much concepts as we thought they would. Okay. But now what we are going to do from now. Okay. So this is kind of set the tone for the remaining portion of the standard. Now what we do is hardcore CA final topics which you can expect in your examination. So now onwards, it starts to get quite serious in terms of discussion. So the first thing that we are going to discuss is bonus issue. Okay, the first thing that we are going to discuss is bonus. Now, what do you understand by bonus? What do you understand by bonus? Sir, bonus means, we are given free shares. We are given free shares. So what I will explain to you is, I will explain the concept of bonus with the help of question number 10. I'll solve it for you right now. And then you can appreciate why bonus has a special treatment in Ind AS 33. Okay. So compute the basic EPS as per Ind AS 33 based on the following information. Number of equity shares outstanding as at the beginning of the period is 5 lakhs. Bonus issue on 1st October is 3 shares for every 1 share held. Net profit for the current financial year is 160 lakhs and the previous financial year is 50 lakhs. Okay. So, current year, previous year. Net profit is how much? Current year 160, previous year is 50. So this is 160 lakhs. Previous year is 50 lakhs. Okay. I will explain first the usual calculation. Number of, or not number of shares. Let us write it as weighted average number of equity shares. Okay. It was rupees 5 lakhs. Sorry, 5 lakh shares. Okay. So 5 lakh shares. 5 lakh shares. Okay. Now, current year, I am having 5 lakh shares plus bonus shares in the ratio 3:1. That means for every 1 share held, 3 shares bonus is given. So bonus shares is 5 lakhs into 3. So that comes to 20 lakh shares. That comes to 20 lakh shares. What do you actually mean by bonus? Does the shareholder invest in a bonus share or is it given to him free? Answer is, sir, it's given free. मतलब क्या होता है? Reserves which are freely distributable reserves are getting capitalized. That means they are getting converted into equity share capital. There is no investment that is happening from the shareholders side. And therefore, in the capital structure, we used to see 5 lakhs in the previous year and now we are seeing 20 lakhs. Now we are seeing 20 lakhs. Okay. So now, if I calculate the basic EPS, it is going to look something like this. 160 divided by 20, this is rupees 8 per share. 50 divided by 5, this is rupees 10 per share. Can somebody respond quickly on the chat box and tell me what is unusual about this EPS? What is unusual about this EPS? if you have invested in this company, if you would have invested in this company, looking at the EPS reported in the current year of 8 rupees per share, what would be your first reaction? What would be your first reaction? Okay. Because first we have to understand the problem that is there. And once we have understood the problem, you need not memorize the solution. You can easily understand the solution logically. So what is profits have reduced or EPS has reduced, Priya Garg? What is happening? There is no inflow cash for bonus, but we are distributing profit to the shares. That's right. That is the meaning of bonus. Absolutely right. Mahinder Kumar is saying the EPS has decreased. So what, Mahinder? Try to correlate with the observation. I have highlighted two figures. Weighted average is not considered, Jay Srivastav, because there is no cash inflow. There is no cash inflow. So these shares were always there. Okay, so no need. When you will consider weighted average, when there is a change in resources, you purchase an asset, you get cash for equity. That time you consider the weighted average. In the case of bonus, there is no change in resources of the entity, and therefore you will not do a weighted average calculation. Increase in EPS or profit is not reflected. That is the answer I was looking for. Good going, Sheena. And Tanushri also has given the same answer. With less shares, more EPS is there, and with more shares, less EPS is there. That's also right. So now, if I was the shareholder of this company, a shareholder who is financially knowledgeable, I will look at this figure. Last year, my profit was 50 lakhs and I got a 10 rupee per share, basic EPS. Current year, my company's profits have gone up by 3.2 times. Very nice performance. Okay. 50 into 3.2, 160 lakhs. I have done more than 3 times better than the previous year. But if I look at my EPS, it is only 0.8 times of the previous year's EPS. And I will be confused. Intelligent students like you who are investors will not be confused because you know that there is a bonus share. But people like me will start to get confused because how 8 and 10 can happen when profits are 160 and 50. So therefore, what the standard tells is, and now please pay attention. The standard tells when there is a bonus, in your, bonus issue in the financial year, you will have to restate the previous year's EPS. You will have to state the previous year's EPS. In fact, the wordings of the standard go something like this. In the case of bonus issue, the EPS of all the periods that have been previously reported and which are appearing as a part of my comparatives should all be restated. Normally, we prepare comparatives for current year and the previous year. So normally restatement will happen for the previous year. However, if you are coming out with a fresh issue, you have to give 5 years financial data. So if there is any bonus issue that has happened now, then for all the previous 4 years, you will have to make a restatement. Now, why do you have to make a restatement? Why do you have to make the restatement is the question. You have to make a restatement because number of shares have increased. Sir, वो तो visible है. But no change in resources of the company. See, if there is a fresh issue of shares, will there be a change in resources? Yes, company will get hard cash. Sir, if you don't give the shares for cash, but suppose you give it for acquiring an asset, then also your resources change. Na, abhi you are getting an asset in your hand. Sir, if we give these shares as stock options to employees, then you are getting service for employees. Those services are adding to your resources. So in other words, whatever be the form of shares, like further public offer, initial public offer, just a public issue of shares, or acquisition of shares against assets, or employee stock options, all these categories involve change in resources of the companies. But in a bonus share, in a bonus issue, or what we call as a stock split or a share split, there is no change in resources. There is just an increase in share capital because my reserves are getting capitalized. My shareholder does not spend even one paisa to get the bonus shares. Today the number of shares held is suppose 20. Tomorrow the bonus is declared 1:1. Automatically in my demat account 20 shares will be added. 20 plus 20, 40 shares will be there in my demat account belonging to this particular company. That is how bonus works. Okay. So because there is no change in resources of the company, you do not have to do a weighted average timing. Sir, why we do not have to do? Why are we doing in the first place? We are doing weighted average number of equity shares in the first place because the resources were available only for a limited duration of time and not the entire year. In all the previous questions that we did, which was a issue of shares, we took weighted average. Why? Suppose the issue of shares happened on 1st July. That means the company got resources from 1st July. That means you have to consider weighted average for a period of 9 months from 1st July till 31st March, because resources were there with the entity only from 1st July till 31st March. And therefore, the weighted average number represents a true picture of how long the resources were there with the company and how it has utilized it to give earnings per share to the shareholder who has invested in that particular company. However, in the case of bonus is declared on 1st July, let us assume. Then if bonus is declared on 1st July, did the company get any resources? Answer is no, it did not. Usne to bas to please the shareholders, it gave the bonus. Okay. No resources coming in. That means whether the bonus is declared on 1st July, whether it is declared on 1st October, whether it is declared on 1st January, whether it is declared on 31st March, koi farak nahi padta. It's not making any difference because the company's financial position does not change on account of the bonus shares. And that is why there is no need to calculate weighted average number of equity shares. Point 1. Point 2, bonus shares will be automatically deemed to have been in existence right from the earliest reporting period. Okay. That is, so the interpretation of this is, that is, bonus shares will be deemed to be in existence right from the earliest reporting period, which is true also. No, what do you think? This is true. Bonus shares आपके capital structure में शुरुआत से थे. It was present already. Only thing is, it was not present as share capital. It was present as reserves and surplus. A board resolution was passed for bonus. Immediate next day allotment ho gaya. The journal entry was passed. Reserves account debit to equity share capital. But if you really go to the substance, these bonus shares were already there in your capital structure. And that is why there is no change in resources. bonus is deemed to be in existence right from the earliest reporting period, and therefore you will accordingly do not calculate weighted average number of equity shares for the current year, and along with that you will restate the previous periods basic and diluted earnings per share. आप उसे restate करोगे, you will do the restatement. So this rupees 10 was your reported EPS. Sir, when I restate, I have to go to that previous year's annual report and make a correction in that, and then I will recall back all the annual reports from my shareholders. With a white ink, I will restate, and then will I again send the reports? No, not have to do such a thing. आपको क्या करना है? In the current year's annual report, you restate the previous year's figures. Okay. So now, if I have to again do this question, net profit 160 lakhs, weighted average number of equity shares was how much? Yeah, this was, sorry, not 160, this was 50 lakhs. Weighted average number was 5 lakhs, but bonus got added, and this bonus is deemed to have been present in the capital structure, and therefore apply the bonus to all the periods prior to the date of issue of bonus shares. So 5 lakhs plus 15 lakhs. So that means this is also 20 lakhs, this is also 20 lakhs, and therefore your basic EPS 160 by 20, this is 8 lakhs, 50 by 20, this is 2.5 lakhs. Sir, ये तो दो अलग चीजें हो गए ना, rupees 10 and rupees 2.5 lakhs क्यों? इधर ध्यान है, rupees 8, rupees 2.5. Okay. So now you look, it was 10 reported, but now in the current year comparative, it is not going to be reported as 10, it is going to be 2.5. Then there will be some people like me who will preserve the earlier annual report, and वो annual report निकाल के I will check the opening balances वगैरह वगैरह जैसे check करते for audit, I will check EPS figure. Last year EPS was 10, this year it is 2.5. ऐसा कैसा हो गया? How did it happen? So therefore we will call this not as reported EPS. We will say that this is a restated EPS. This is a restated EPS. Acha. Profit went up by 3.2 times. EPS also has gone up by 3.2 times. So now, is this picture giving a correct view of what is happening in the company? Yes, net profit went up by 3.2. EPS also has gone up by 3.2, because ideally दोनों के बीच में there should not be much of a difference. You should be able to explain why the movement in EPS is happening, on account of net profit how much, on account of gains how much. You should be in a position to explain. So is this understood? Is bonus understood by everyone? सबको समझ में आ गया? Did you understand bonus? Yes. Anybody has any doubts? Weighted average not considered, I have explained. Tanushri Sheena Jain had correctly pointed out the issue. Mahinder had also correctly pointed out. Sai Ram explained what is bonus. From my side, no queries are pending, but if you have anything, please let me know. Otherwise, have you understood the concept of bonus? If yes, please give your answers yes. Mahinder has confirmed yes. ओके, तो अभी क्या होगा? we will have to do a restatement of bonus. We will have to do a restatement of previous periods. क्या बोलते हैं उसको? EPS. Okay, so that they become comparable. Okay, now let us move one step further. Okay, suppose 1st April. Okay, now this is a separate example. Right now we have understood why do we need to do a restatement. Okay, and we have discussed the concept also in brief. Now, how do you do the restatement is what I'm going to explain with a small concept. Okay, so now let us assume that on 1st April, you had 1 lakh shares in your capital structure. Okay, on 30th of June, further issue for cash. So this is not bonus. Okay, 50,000 shares. Okay, 1,50,000 shares. Then first October, 1:1 bonus. So 1,50,000 shares. 3 lakh shares. This is on 31st of March. This is what is going to be your capital structure. Now, what I want you to do is calculate weighted average number of equity shares. Calculate weighted average number of equity shares. Okay, for this example. Calculate veins for this example. Remember, bonus is there. So bonus will be deemed to be in existence right from the earliest reporting period, which in this case is the current year only. Okay. So I want you guys to tell me what is going to be the weighted average number of equity shares. What will be my veins? 2,87,500. I got the answer by Sheena Jain as 2,87,500. Any other answers? Okay. Any other answers? Please try, guys. I want you to make mistakes. If at all you are afraid of making mistakes, don't be. यहाँ पे जितना चाहे उतना mistakes कर लो. Don't make mistakes in exam hall. Ask your questions repeatedly. Feel free. Sai Ram has got 1,87,500. Okay. Good. I like people who give me different answers. Okay. So let me try to do the veins calculation the way these people have done. See, the initial 1 lakh shares were there for entire 12 months plus 50,000 shares were there for 9 months, correct? Plus bonus issue of 1,50,000 shares were there in existence for the entire period. Okay. Sir, you had told us to calculate like this, so हमने कर दिया. So this comes to 50,000 into 9 by 12. So that is 37,500 plus 1 lakh, 137,500 plus 1,50,000. So that is 2,87,500 shares. Sairam, you have forgotten the opening balance. You have forgotten the opening balance. Okay. Tanushri also got 2,87,500. What about Srinidhi? What about Mahinder? क्या आपके आंसर्स भी सेम आ रहे हैं? Are you getting the same answers? Yes. Sairam got 287. Yes. Others, Tanushri also got this answer. Okay. Now, I am okay with this part. This is correct. 1 lakh into 12 by 12. I am also okay with 50,000 into 9 by 12. But I am not okay with this part. 1,50,000 into 12 by 12. But sir, you only had told no bonus shares are deemed to be in existence right from the very beginning. हाँ मैंने बोला था. I'm not denying that. I'm still saying that bonus shares have to be in existence. But beta, just look at what you are trying to imply. अभी जरा ध्यान से सुनो. 1 lakh shares were there right from the beginning. So on these 1 lakh shares, another 1 lakh share is the bonus. Okay. But on this 50,000 shares, the right to get the bonus arises on which date? Does it arise from 1st of April or does it arise from 30th of June? Sir, it arises from 30th of June. Arey, when fresh shares are there, only then you can get a bonus. Against 1 lakh shares, how can you get 1,50,000 bonus? Against 1 lakh, you will get 1 lakh. Against 50,000, you will get 50,000. So the extra 50,000 bonus, when is the right to get that 50,000 accruing to you? Is it accruing from 1st April? Nahi sir, us time pe that 50,000 shares were not in issue. So you cannot get the bonus on that. You can get the bonus on 50,000 only with effect from 30th of June. And therefore, what would have been the right answer? The right answer would be bonus is there right from the beginning, provided the right to get that bonus is there. No. So plus 1 lakh into 2 by 12 plus 50,000 shares. ये तो on fresh issue ना, into 9 by 12 plus 50,000 into 9 by 12. Okay. You cannot take 1,50,000 into 12 by 12. आप 1.5 लाख बोनस शेयर को पूरा साल का वेटेज नहीं दे सकते. क्यों नहीं दे सकते? क्योंकि जिन शेयर्स के सामने बोनस मिल रहा है आपको, वो शेयर्स पूरे 12 महीने के लिए थे ही नहीं. 1.5 लाख जो शेयर्स थे पहले, उसमें से 1 लाख शेयर्स आपके थे स्टार्टिंग ऑफ द ईयर से. You had 1 lakh shares right from the beginning of the year. Additionally, 50,000 got added as a fresh issue on 30th of June. So the right to bonus on those 50,000 shares arises on 30th of June, not on 1st April. If we do the way you have done, you will never be able to find your EPS because I always have a right to get bonus. How am I going to be realistic? Okay. So therefore, now if I do the calculation, I will get 37,500 plus 37,500, that is 75,000 plus 2 lakh. So 2,75,000 shares is my correct answer. That's right. Okay. So I'm happy that all of us, whoever have tried, got the wrong answer. Yes. That way we have understood that why that answer is wrong. Getting wrong answers is not a crime. Okay. But once you got a wrong answer, where it went wrong is what we have to understand. Excellent. So Tanushri has confirmed, Sheena has confirmed, Mahinder has confirmed. Srinidhi, I hope you understood 2,87,500, why that was a mistake. I hope you understood. And the others who have answered 2,75,000 also, Mahinder, Tanushri, Sheena, if we know our mistake, we should now be able to understand 2,75,000 क्यों सही है? Why is that the right answer? Where is my friend Jay Srivastav? Did you understand, Jay? Are you there online? Yes, I hope you understood. Okay. Priya Garg has understood. Capital में लिखी है वो, सर समझ में आ गया अपने को. Okay. All right. But you tell me one thing. आज कोई एग्जाम नहीं था. There was no pressure upon you. Okay. This is the class. Many of you are probably looking at further attempts like May 23 or November 23. What about when pressure was not there? That time we went wrong. Okay. So in your exam, in a 3-hour paper where you have the stress of clearing, getting good marks, this is your first paper. How do we exactly remember to do this? ये problem होता है ना exam में. यहाँ पे everything was normal. We committed a mistake probably because अपने को पता नहीं था. But do you think we can recollect this in exam? It's a little difficult. It's a little tricky because we have a pressure of completing the paper. So what is the way for a safeguard? What is the way of a safeguard? So there is an alternative. Yes, standard as explained, you have to restate the previous EPS. Bonus is present from the earliest reporting date. That is what the standard tells. Computation is our what you can say speciality. अपने को जैसे भी compute करना है, we have to get what the standard wants. Okay. So now what we do is we make use of something known as a bonus adjustment factor. We make use of something known as a bonus adjustment factor. What do you mean by a bonus adjustment factor? Bonus adjustment factor is number of shares post bonus divided by number of shares pre-bonus. Sir, matlab it is just a ratio. It is just a ratio. Okay. So therefore, pre-bonus, if I had 1 share with me, post-bonus, I would get another free share. So number of shares post-bonus would be existing share 1 plus a new bonus share. So 1 plus 1, 2. So your bonus adjustment factor is 2 by 1. Your bonus adjustment factor is 2 by 1. And now this bonus adjustment factor, you will apply to all the shares that are there in the capital structure before the date of bonus issue. Before the date of bonus issue. मिसाल के तौर पे 1st April, I had 1 lakh shares. Right? So therefore, into bonus adjustment factor into, this was opening balance. So 12 by 12 plus 30th of June. You issued new shares, 50,000 shares into 2 by 1 into 9 by 12 into 9 by 12. हो गया? Yes. And then on 1st October, there was a bonus issue. There was a bonus issue. But will you consider the bonus issue again? Answer is nahi, Baba, you will not consider. Why? Because this bonus issue is already considered here. in this bonus adjustment factor. So now when I calculate 2 lakhs into 1 lakh into 2 is 2 lakhs. So this is 2 lakh shares plus 50,000 into 2, 1 lakh into 9 by 12. This is 75,000. So 2 lakh 75,000 shares. This is your weighted average number of equity shares. This is your weighted average number of equity shares. Is it okay? Yes. So what you have to do is very simple. Whenever there is a bonus, you could do this method also. I'm not saying you cannot. Answer will come right, but there is a chance of going little bit wrong at some places. Okay. So that you don't go wrong, what we could do is we calculate something known as a bonus adjustment factor. What is bonus adjustment factor? It is a ratio. Ratio of shares after the bonus divided by ratio of shares before the bonus. So 2 by 1. So that is your share. That is your the bonus adjustment factor. Once you calculate the bonus adjustment factor, for all the shares in the capital structure prior to bonus, you adjust them for the bonus adjustment factor after giving effect to the weights of time also. So weights of time we have adjusted for the 1 lakh shares opening, for the 50,000 fresh issue. Do not again include the bonus, because this bonus of 1,50,000 is already included here. 2 by 1 bonus factor ke calculation mein bonus is already included, and therefore you need not do the inclusion again. You need not do the inclusion again. Okay, so don't include the bonus again. This is what is going to be your adjustment for bonus, and your vains is 2,75,000. Acha, let me move one step further. We started off with 1st April 1 lakh shares. Okay. 30th June fresh issue 50,000 shares. 1st October bonus 1:1, and then 1st January we are having further fresh issue of 75,000 shares. Okay, fresh. So now how am I going to calculate? Well, now I will be calculating this as vains is equal to 1 lakh into 2 by 1 into 12 by 12. What is 2 by 1? Bonus adjustment factor, plus 50,000 into 2 by 1 into 9 by 12. Okay, so this is done. This is done. Will you again record the bonus? No, you will not. Okay, because it's already included. And so this won't come. The fresh issue, will you record? Obviously, but will you get a bonus on that? No. Bonus is for what is the shares in capital structure on the date of bonus. 75,000 came later on. So 75,000 into 3 by 12. That's it. So this gives you 75,000 into 3 by 12 plus 2,75,000. So 2,93,750 shares is going to be your weighted average number of equity shares. Is it okay? Yes. In the restated EPS, we will ignore 50,000 bonus. Definitely. Yes. The right to that 50,000 bonus, J, came on 30th of June. It came into existence on 30th of June. Why you're talking about restated EPS? I have ignored that bonus for these 3 months only. So previous year, obviously you have to ignore it. Okay. आपको obviously उसे ignore करना होगा. It's because the right to receive that bonus did not exist, because the shares based on which the bonus was calculated did not exist in the previous year. Okay. Yes. Any doubts so far? Is bonus adjustment absolutely clear? Is the bonus adjustment completely clear? Yes, no doubts. Jay has confirmed. Priya Garg, Sheena Jain, Tanushri Agrahari, Srinidhi, Sairam. Priya has also confirmed. Chalo, acha hai. Yes. So now we come back to where we had left. Yes. Okay. So I am talking about issue or reduction of shares without a corresponding change in resources. मतलब bonus buyback भी आते हैं, reverse share split, etc., etc. But buyback, there is a small change in resources. We'll be doing a question on buyback. Don't worry. Rights issue will be doing. Okay. But what is this? The weighted average number of ordinary shares outstanding during the period and for all periods presented shall be adjusted for events other than conversion that have changed the number of ordinary shares outstanding without a corresponding change in resources. Okay, so this is what is the treatment. Okay, and now whatever we have discussed, I have just made a summary for you. Okay, so what will I do first when I see bonus? Compute bonus adjustment factor, BAF. What is my BAF? Post bonus shares divided by pre-bonus shares. Post bonus divided by pre-bonus. Okay, so this is my bonus adjustment factor. Restate all shares prior to the date of bonus issue after multiplying with bonus adjustment factor and then compute the weighted average number of equity shares. Okay, so restate all shares prior to the date of bonus issue. Compute basic EPS for current year. Wahi BAF leke, take the same bonus adjustment factor, take previous year's weights, multiply it, and then that should give you the what you can say, bonus component forming part of last year's number of shares. So using denominator as previous year's weights adjusted for bonus issue or share split using the bonus adjustment factor, and then you restate the basic EPS for the previous year. Is it okay? Yes. So that is what is there in your bonus calculations. Is it okay, everyone? Yes. All right. Excellent. Jay has confirmed. Okay. So now we shall proceed further. How do we do it? Okay. Question number 11. Okay. Wait a minute. I'll do this later. We'll keep this later. Let us first do institute's illustrations. Okay. On 31st March X2, the issued share capital of a company consisted of rupees 10 crore in ordinary shares of 25 each. So rupees 10 crore divided by rupees 25 per share. Divided by 25. So 40 lakh shares. 40 lakh shares. And rupees 5 lakhs in 10% cumulative non-redeemable preference shares classified as equity of rupee 1 each. Okay. On 1st October X2, the company issued 10 lakh ordinary shares fully paid by way of capitalization of reserves. Then we call it as bonus in the proportion 1:4. Profit for X1, X2 and X2, X3 is 4,50,000 and 5,50,000 respectively. Calculate basic EPS for X1, X2 and X2, X3. Read the question, please. Read the question, please. Read the question. 11.47. Okay. All set? Okay. March X2. Rupees 10 crores. Rupees 25 per share. 40 lakh shares. Bonus ratio 1:4. That means for every 4 shares held, you get 1 shares. Therefore, bonus shares is equal to 40 lakhs into 1/4. So that is 10 lakh shares. That is equal to 10 lakh shares. Okay. So these are the total bonus shares in issue. Bonus adjustment factor. Pre-bonus for every 4 shares you are getting, post-bonus for every 4 shares you are getting 1 upon pre-bonus 4. So that is 5/4. That is equal to 5/4. So now retrospectively go on adjusting. Basic EPS. What would have been reported? Reported would be 4,50,000 divided by 40 lakh shares. Four lakh 50 divided by 40 lakh shares. So that is equal to 0.1125 per share. Okay, now I will have to restate this. Basic EPS restated. Rupees 4,50,000 divided by whatever be the shares in your capital structure prior to the date of bonus, apply the bonus adjustment factor. तो ये तो previous year का है. So 40 lakhs into bonus adjustment factor is this figure, 5/4 into 12/12. So that is going to be how much? Rupees 0.09 per share. That is going to be 0.09 per share. Are we following? Are we following? अपने को समझ रहा है? श्रीनिधि, प्रिया गर्ग, जय श्रीवास्तव, are you following the calculations? Yes, sir. BAF denominator is pre-bonus. Pre-bonus. Okay. Number of shares pre-bonus. Numerator is post-bonus. Okay. Mahinder is one who confirms quite fast. बाकी सब लिखते रहते हैं लगता है. Classified as equity will not be considered. No, see, Jay Srivastav, at the beginning of today's class मैंने क्या बोला था? EPS is calculated from the perspective of the person who has the last residual interest in the net assets. These are preference shareholders, matlab they will be having some interest which is not residual. Okay, so we cannot calculate the EPS from their perspective also. It will be from equity shareholders perspective. Working. Can you find the EPS for 2012-13? Sorry, for 20x2x3, not 12-13, 20x2x3. Try to get me the EPS for 20x2x3. Srinidhi, Priya Garg, Tanushri, Jay has confirmed. एक और था ना, साईराम. Okay. Try to get me the EPS for x2 x3. बहुत सिंपल है. Sheena got the answer 0.11. Very simple. EPS 20x2x3 rupees 5,50,000. divided by 40 lakh shares into bonus adjustment factor into 12 by 12. So that gives you rupees 0.11 per share. 0.11 per share. One second. What have I done? It should be 5 lakhs. Yeah, not 5 lakh 50. 5 lakhs. Yes, you will be deducting the profit for that reason. It should be minus 50,000. My bad. Okay. Yes, deduct. One second. 1 minute. 1 minute. Yes. Yes. That's right. I was wrong. Thank you. This is rupees 0.10 per share and this is 0.08 per share. You are right. This is 5 lakhs divided by 50 lakhs. 0.10. This is right. Okay. I'm sorry. We should be deducting the preference dividend also. Okay. We should be deducting the preference dividend also. Jay Srivastav, classification as equity means it is equity, but we are computing the EPS from the perspective of the final equity shareholder, not from the perspective of an intermediate. Okay, so that is why you will have to deduct the preference dividend. I did not deduct it, my bad. Okay, I did not deduct it. After deducting, it should be 0.10 reported and 0.08 restated. Okay. All right. So that is how you will have to do it. Okay. All clear. Okay. So Srinidhi, you have confirmed. That's right. Sheena, you will have to deduct 50,000. I also did not deduct. Okay. You will have to deduct because that is preference dividend. Okay. That is preference dividend. वो deduct करना पड़ेगा अपने को. We will have to deduct it. Who was that? Priya has given the right answer. Thank you. Okay. All well then. So that takes care of that illustration 4. Let us move on to illustration 5. Now, X Limited, 1st January 10 lakh shares in issue. 28th February issues 2 lakh shares at fair value. 31st August bonus issue 1 share for 3 shares held. 30th November issues 2,50,000 shares at fair value. Calculate the number of shares which would be used in the basic EPS calculation. Consider the reporting date as 31st December. Okay. Simple F. What is the bonus adjustment factor? Bonus adjustment factor is equal to 3 shares for every 1 share held. Sorry, 1 share for 3 held. What am I reading? Holding 3, you are getting 1 share divided by pre-bonus. So this is 4 by 3. Now this bonus adjustment factor will be applied to all shares that are already there in issue. Okay. So how do I do that? Well, 10 lakh shares, or we do the timeline this time. Just to show that answers do not change. 1st April 20x1. Sorry, 1st April, 1st Jan. 10 lakhs shares. Next, 28 Feb, 2 lakhs. 28 Feb, 2. So 10 plus 2, 12 lakhs. Next, 31st August, bonus. Next, 30th November, 2 lakh 50. Plus 2 lakh 50 at fair value. At fair value. Okay, so now if I look at the timeline, this is Jan, Feb, 2 months, March, April, May, June, July, August, 6 months, September, October, November, 3 months, and this is 1 month. 31st December X1. And now we do the calculation. Apply the bonus factor 4/3 to all the shares in existence prior to bonus. After the bonus date, no adjustments. Okay. So 10 lakhs into bonus adjustment factor 4/3 into 2/12 plus 12 lakh shares into 4/3 into 6/12. Do not record the bonus again. But how many shares would you be having? How many shares would you be having from the bonus date? From the bonus date, how many shares would you be holding? $16 lakhs. Yahan se you will be having 16 lakh shares into 3/12 plus 16 plus 2, 18 lakh 50,000 shares into 1/12. You can do it like this, in which case 222 plus 60. 8 lakhs plus this is 16 lakhs into 3/12, 16/4 plus 167, 154, 167, 12 lakhs, 15 lakh 76,389 shares. Okay, so you can do it like this also, or you can do it something like this also, the way I'm showing it to you. which is just a kind of an extension of this approach only. 1st Jan X1, 28 Feb X2, 31st August X3, X1, 30th November X1, 31st December X1. 2 months, 6 months, 3 months, 1 month. So initially, for these 2 months period, I had 10 lakh shares. 2 lakhs got added. So here I had 12 lakh shares. In this 3-month period, I had 16 lakh shares. And in this 1 month period, I had 18 lakh 50,000 shares. And now the bonus shares are included here, this component. Okay. So these bonus shares will now be added to wherever the shares were present prior to the date of issue of bonus. So as if they were present right from the earliest reporting period. So this is shares. This is now the bonus element. So that is 4 by 3, that is 3,33,333 shares. And then 12 lakhs into 4 by 3. 12 lakhs into 4 by 3. That is your total minus 12 lakhs. So that comes to 4 lakh shares bonus. So therefore, your total number of shares here is 13 lakh 33,333, 16 lakh shares. Here it is. After this date, no adjustment for bonus. 18 lakh 50. Just multiply with the periods and you would be left with the same answers as above. Okay. Same answer as above you are going to get. Is it understood, everyone? Yes. Have we understood? Are you guys satisfied the way the class is progressing? I am not able to find some answers. Pata nahi. Have you understood? Yes. It is clear. I'm not feeling satisfied with the way the class is progressing. I mean, I don't know. Maybe you guys are busy calculating. Six by 12 कैसे आ गया तनुश्री? 6 months ना? Feb to August weighted average. मतलब March, April, May, June, July, August. 28th Feb का हो गया ना? So that is as good as 1st of March. So 6 months. 6/12. You can pick it by any method that you want. Okay, answer will be the same. Samjha, Tanushri? No problem. You can solve by multiple ways. 2 लाख फेब में इश्यू हुए. हाँ, बट बेटा क्या हो गया ना, 31st अगस्त में आपका बोनस भी आ गया, राइट? सो once the bonus has come, I am to this 12 lakhs, I will add another 4 lakhs. So this 12 lakhs is already included in this 16 lakhs. ठीक है? And it is also included in this 18 lakh 50. So है तो 10 महीना, but it is split up. Okay, it is split up. You know what? If you are doing it like that, you can also do it like this: 13,33,333 into 2/12 plus. You will have to take this as 16 lakhs because bonus element is there. Okay, you will have to take this as 16 lakhs. But here you will take it as 18 lakh 50 towards the end. That's it. Okay, so वो लेना पड़ेगा आपको. You will have to do that adjustment. Okay, girls, Srinidhi, did you follow? But I solved the other way. 10 plus 2 plus 2.5. 10 lakhs ठीक है, 2 lakhs ठीक है. Great, that can also be done. Okay, no problem. Yes. Done. Yes, any other doubts? Yes. Shall we proceed further? Yes. Okay. So now tell me, this is just a precursor for our discussion on rights issues, which we will be doing in the next class. But I thought that let me just introduce the topic to you so that you will remain familiar with that. Okay. So impact of bonus on market prices. What do you think will be the impact of bonus issue? Suppose Reliance Industries Limited share today is quoting at, let us say, 2,800 per share, and it declares bonus 1:1. So what will be the impact on market price? What do you think? Just theoretical market price. Don't talk sir market sentiments hai, aise hai, वैसे है. I don't want those answers. Plain simple logic. Okay. Because market has lot of sentiments. Okay. But plain simple logic, what does it demand? Market price should be how much? Acha, bonus na say you call it as a stock split also. Stock split. Whatever you want, you can call. Okay. What will be the impact on market price? Will the market price double? Will it become half? Will it go up 20%? क्या लगता है आपको? What do you think? What will be the impact on market price in the case of a bonus or a stock split? Come on, yaar, simple it is. It's quite simple. Should not be taking so much of time. No effect on market price. Okay. No, as a whole, there won't be any effect. Acha, let me frame it this way. You should be able to understand better. Let us assume that Reliance Industries capital structure has only one equity share whose price is rupees 2,800. One share. Now there is a bonus issue. So now you will be having two shares. So no impact on market price means market price remains as 2,800. I agree. But on a per share basis, will it change? Yes, it will. If it was 2,800 for one share and now I have two shares coming in at the same price, that means my market price will become half. My market price will now become half after bonus. After bonus. Yes or no? Simple thing, yaar. See, you had one share with you worth 2,800. So price per share was 2,800. Abhi ye one share became two shares, but there is no change in the resources. So therefore 2,800 remains the price. But instead of one, you now have two. So each share becomes worth how much? Each share becomes worth 1,400. The value of each share becomes 1,400. Okay. Now, bonus adjustment factor, number of shares post bonus. I had one share before, because of bonus one more share, divided by one share. So that is 2:1. Okay. Market price ratio pre-bonus divided by post bonus. Pre bonus कितना था? 2,800. Post bonus कितना है? 1,400. So this is also 2:1. That means the bonus adjustment factor is a nearly accurate representation of the market price ratio that arises when a bonus is declared. So you had a bonus adjustment factor of pre-bonus shares was 1, post-bonus shares was 2. So your bonus adjustment factor was 2:1. However, if you compare the market price also, the price before the bonus was 2,800. The price post the bonus is 1,400. Hoga hi wo, because number of shares have doubled with the same market capitalization, right? So therefore prices automatically go down by half. So 1,400. So therefore that ratio also is 2:1, which means your bonus adjustment factor is an accurate representation of the market price ratio prior to bonus and post the bonus. Is it understood? Is it understood? Yes or no? अरे बाबा yes or no? अपने को समझ में आ गया? Yes. It is an accurate representation. Yes. Why do I need this? ये जानकारी जानकर हमें क्या करना है? What do we do with this knowledge? This knowledge is not useful for bonus. This knowledge is not useful for bonus. But this knowledge starts to become useful when we calculate the bonus component in a rights share. When we calculate the bonus component in rights share. Okay. What do you mean by rights? What do you mean by rights? It is a further offer that is made to the that is a further offer that is to be made, and the Companies Act requires that you should first make the issue to the existing shareholders. If they are unwilling, then you can issue it in the public. So therefore, you are going to make a rights issue to your existing shareholders. Now the thing is, if it is a rights issue that you are making, will you make it at fair value or will you make it at a discount? Will you make it at fair value or will you make it at a discount? Sir, we will make it at a discount. मेरे पास तो सारे details है. I have all my details of my shareholders. I don't have to again make detailed disclosure requirements and prepare huge statements and present. My shareholders know everything. So therefore, I will prefer going ahead with rights issue as compared to a fresh issue. But that's right. There will be a change in number also. And because of that change in number, your market price per share automatically gets down to half. Okay, Sairam? Wo theek hai. So now the thing is, in a rights issue, you are not making the issue at fair value. You are making it below the fair value. You are making it at a discount. You are making it at a discount. You are giving the rights issue at a discount. Uska kya matlab hai? It means that in your rights issue shares which you are issuing, you are putting in a discount. You are putting in a discount. That means in the total size of the rights issue, there is a bonus component which is hidden. In the total rights issue that you are making, there is a bonus component in that. I will leave you with one homework. Okay. I will leave you with a couple of things to do. Just go through this company's annual report for the year 2019-20, 2020-21, I think. Okay. Just go through this. All right. Just let me confirm. This is 2019-20 and this is 1 second. Yes, go through this EPS disclosures. EPS disclosures. Okay. Why I'm telling you to go through this is because in the year 2021, there was a rights issue in this company. I don't want you to sit and calculate the rights issue. We probably don't have the adequate inputs to do the correct calculation as per the rights issue. What will be the EPS? But I want you to see that there is a bonus component which is involved in the rights issue. As a result, what we used to do in bonus shares, we used to restate the previous year's EPS. So when you look at 1920 balance sheet, you will check that there is a particular EPS figure in the P&L, and when you look at 2021, there is a restated EPS of 1920. I want you to go through this. I want you to go through this sincerely, because my next topic, which is going to be discussed on Saturday, you don't have a class on Thursday, which is going to be discussed on Saturday, I will be touching up on rights issues, and rights issues have a bonus component. How to calculate the bonus component, what effect needs to be given, and whether there is any shortcut to do that, we will be discussing it in the next class. But so far, is this class helpful to you? Was it okay? Do you have any suggestions or anything to improve upon? I find that the interaction is not that great. Viewership also is not that great, but I think maybe you guys were busy calculating today. Okay. So if there is anything you would like me to improve upon, please let me know. Okay. Otherwise, we meet on Saturday morning with rights issues and lot of other concepts. Okay. Today I'm in a little bit of hurry, so I have to close before my usual delay. अरे 2 घंटा और तो सर जी मेरे पास टाइम नहीं है, होता तो मैं डेफिनेटली ले लेता था. सैटरडे को we will have a class. Okay. Is it okay, everyone? Have you understood so far? Anybody has any doubts in today's class? We've completed bonus. So what I want you to do apart from that is, in your homework में कुछ छूटा है क्या? Yeah, do this for homework. Solution is given to you. Okay, so question 11, try to do it for homework. You can check the answer also. Okay, then we shall pick up rights issue. We shall pick up rights issue. Okay. All right. Any doubts? No doubts? I'll wait for a minute or two for you to respond, and then I shall close the session. EIH Limited. EIH. This is basically, I think this is your parent company of, this is the company of Oberoi Group. Oberoi Hotels नाम सुना है ना? So ये उसका है. Okay. Okay, so I want you to go through this, because you will try to get some value addition on rights shares. Okay. Not ICHR. It's not ICHR Limited. It's just EIH. Okay. You can search on the Google. This is the website. EIH limited.com. Just go through this. You should be able to get it. Okay. Yes. All right. So we close today's session. Koi bhi, if you have any suggestions or any ways where I can improve, please feel free to mention. Okay. That's it then for today. We shall close and see you guys on Saturday morning. Okay. Saturday morning हम लोग मिलेंगे. ठीक है. Be fresh, revise and come. Revise the bonus and come. Okay. All right then. Thank you. Thank you. Nisarg.